Good morning, ladies and gentlemen. My name is John O'Sullivan, the CEO and Executive Director of Experience Co. And yes, I know that I'm not at the Morgan Sydney conference. I'm at the NWR conference, but today's presentation in and around Experience Co. Is modelled on this particular presentation, which we also released to the ASX this morning. What I thought I'd like to do is for the next sort of 10 minutes or so is just really run through a little bit about our business and a little bit of an update about where we are and what we expect to see with our company, particularly as we work through the recovery of inbound tourism into Australia. And I always like to start with this particular slide when talking about Experience Co, because over the last 4 years since myself and my CFO, Owen Kemp, joined the business, this is a business that has gone through a radical transformation. We've reset our strategy, we've reset our personnel, we've really reshaped the business and in many ways simplified it. And as a result of that, this business has emerged from COVID, as counterintuitive as that may actually be to many people. This is a business that has emerged from COVID in a better shape than what it went into it. It's fundamentally a better business than what it was pre-COVID. And really importantly, that underpins that is that we believe that this is a business that when international markets return to a normalised run rate, when domestic markets return to their normalised run rate, this is a business with the new acquisitions that we've made can make $40 million at an underlying EBITDA level. So this is something that we're very excited about the prospects moving forward. For those of you that aren't aware about our business structure, the way to think about Experience Co is in two very distinct parts. We have our skydiving business, which is our tandem skydiving experiences, and our aviation and air operations side of our business. And in addition to that, we have our adventure experiences. And our adventure experiences are the experiences that we have within the company that are non-skydive and aviation related. So our Refund Limited business, our Treetops Adventure business, and Wild Bush Luxury. Each of these businesses in their own segment hold the position of number one or number two in their particular market category. And that's really important to us because these are businesses which are leaders in their field. And if I work sort of left to right across the screen in terms of what has been the focus for these businesses, particularly over the last quarter, you'll see the different stories that are emerging and the different types of business that are contained within. Within our tandem skydiving business, it's really focused around recovery of that volume, getting those volumes back to pre-COVID levels of FY19. And where we are right now is probably around about 50% of the way of that journey on the way back. So this is a really important part of our focus right now. And part of that, which we're working on, is really the supply of labour into that tandem skydiving side of our business. For our aviation business, we run the largest fleets of Cessna Caravans in Australia and also across into New Zealand. We have about 24 aircraft within our fleet. And really what we've been focusing on there is asset utilisation. So when they do skydives during the day, you'll often find them doing freight runs during the evening. But also consistent with that theme on recruitment is most recently we've just purchased a business, the Australian Jump Pilot Academy, so we can actually vertically train our jump pilots to supply that labour. If I go into our adventure experiences business, our business on the Great Barrier Reef has been a standout for our company since about April of 2022, when the domestic market really started to aggressively tour around Australia post-COVID. And we're still seeing a continued strong performance within that business. But what's really pleasing as well is we're also now starting to see that international customer starting to come back in. And in March of this year, that was up around that sort of 30 to 35% of our addressable market within that business was international. Treetops Adventure and Wild Bush Luxury, the newest parts of our company, really the story here is about organic growth to support the existing business units. In Treetops Adventures, we rolled out we've rolled out since acquisition. We've rolled out 2 new sites and reopened a 3rd at Taronga Park Zoo, and we plan to launch a new site within Southeast Queensland and the ACT by the end of Q1 of the calendar year. And for Wild Bush Luxury, we've focused on expansion of the Bamaroo Plains Wilderness experience by adding another 30% in new room capacity. So as you can see, very distinct adventure businesses that all have a particular focus within the company. This is our Q3 trading update, and I think what I want to highlight here is really a number of things. The first thing is you can see from there at a revenue line level that just how the business is now starting to recover. Well, just on 69% increase in top line revenues to 28.1 million in Q3 of 2023 compared to the same quarter in FY 2022. And on a year-to-date basis, a far more pronounced recovery at over 122%. What's really interesting for us in this, though, is you'll notice in the skydiving side of our business, you can see the change or the aggression in the change of revenue for that business from a quarter perspective, but also a year to date, running it over that 110%. And that is symbolic of the fact now that we're starting to see that international market return. So overall, we were very happy with that quarter trading. For those of you that don't know our business, we will in July do a similar trading update on Q4. So stay tuned for that. But we've seen, certainly in this quarter, our, best revenue performance since the emergence of COVID back in 2019. What really does give us a lot of hope at Experience Co is in and around the recovery of international visitation to Australia. And certainly for our business to achieve that $40 million, it really is about that international recovery story. And what we're seeing in the short term in Australia is really positive. If I go left to right across the screen, this data has been given to us by the Australian Bureau of Statistics and also Serum SRS Analyzer, which analyses aviation capacity. And this was also provided and verified by Tourism Australia. And what we've seen in Australia is about 83% capacity now in terms of aviation seats coming into Australia of pre-pandemic levels. So that's across every airline that's flying into Australia. What we're now also starting to see is that recovery of visitor arrivals, but also that outbound travel by Australians. And outbound travel by Australians is now at 89%. And the visitor arrivals is around about that 73%. So both are recovering quite strongly. Now, what's really interesting in this is you're probably thinking, why would I be highlighting Australians heading outbound when I run a business that's based here in Australia and also New Zealand? The simple fact for that is that that outbound number is really important for airlines to put the capacity into Australia. So it's a really important metric to check. Now, within that 73% of pre-pandemic levels, there's the type of visitor that comes to Australia, and there are predominantly 3 types of visitor that comes to Australia. There's a business traveller, those people who are visiting friends and relatives, VFR, and there's those people who come on a holiday. The customers that we really like are the holiday customers, and that's running now at about 57% as of March 2023. And VFR is about 101%. So it's actually a greater number of visiting friends and relatives relative to FY19 are coming into the market. That's being driven, that number, by the return of the China market, which reopened in January. And we expect that will continue over the next couple of months. But then as we've seen overall, you'll start to see that leisure traveller and that holiday arrival number become the more prevalent of the arrivals into Australia. From a long-term perspective and also a China perspective for our business, we also track this through our friends at Tourism Australia and also Serum as well. And what we're really buoyed about is that we know that the long-term prospects for inbound tourism into Australia out to 2030 are really positive. On the left-hand top side of the slide, you'll see that Tourism Australia mapped their top 15 markets across the world every year. And what we're seeing is that, as more things change, the more they stay the same. And particularly in and around China, New Zealand, the United States, UK and Japan will be the top 5 markets that out by 2029 that come into Australia. And that's pretty consistent to where it is pre-pandemic. But what's really exciting to us is 2 things. Firstly, the volume return of the Chinese visitor. And secondly, is the emergence of the Indian market as well, because we know that both markets are very big consumers of adventure experiences, nature-based experiences, and experiences on the Great Barrier Reef. Furthermore, what we're also very excited about is in the bottom left of that screen, you can see international arrivals model done by Oxford Economics on behalf of Tourism Australia. And what that's telling us is that by 2025, that they will predict that the international arrivals into Australia from China will be about 25%, 27% larger than what they were in 2019. And that's really supported by the data to the right of that, which shows the predicted increase in seat capacity, which by the end of the year out of China will be back at 80%, which again, we're very, very excited about in returns to our business. Just to close off before I hand back to Sam and answer questions, what is our focus for FY24? Well, very simply, it's around 3 things. The first one is the inbound visitor recovery. We are working incredibly hard in terms of the top line, in terms of generating revenue and sales into both our skydiving business and our Reef Unlimited business to get back to those pre-pandemic levels as quickly as we can, but also supporting that by investing in growing our staffing levels. So right now, one of the big things we're pushing our operational teams on is about investing in specialist roles ahead of that demand returning, so as we're ready to fulfill that demand when it eventually comes, which we think will be towards the back end of the year. The second thing for us is maintaining our vigilance on our balance sheet. One of the things we're very proud of is that during the pandemic, we didn't have to raise capital for balance sheet repair. And that's down to the fact that we've managed our cash levels and our net debt in a very disciplined way. And then finally, and very importantly, we are building that expansionary pipeline of acquisitive activities, as well as looking at those organic opportunities, which are in particular the Treetops Adventure and also Wild Bush Luxury disciplines, but all with the goal of getting those earnings back to that $40 million mark. In and around that FY25 financial year, we expect that run rate to emerge, but certainly really targeting at FY26 for a full recovery at that level. So thank you once again for your time, and look forward to taking your questions.
Great, thanks, John. That's a good overview. Just as a reminder to the audience, this is designed to be interactive. You can submit questions through the Q&A function at the bottom of your screen, just accepting written questions. We do have a couple of pre-submitted ones. The company was clearly at the epicenter of COVID, as you've outlined. If you rub out the last sort of 18, 24 months, how comfortable are you that you're sort of now executing against the strategy reset that you laid out, I think, a couple of years ago?
Really comfortable, Sam. If you think about the core of the strategy that we spoke about to the market at the AGM in 2019, it was really built around 2 things. One was business simplification, and two was normalising the cost base. What we did during 2019 and then during COVID was we sold down all of those non-core assets that we had within the business. So anything that wasn't on the water in the Great Barrier Reef, we disposed of. So helicopter businesses, hot air ballooning, etc. We executed against that, and that was done, pretty much by the end of 2020. And then the other part was in and around normalising the cost base, and what we were able to achieve from the back end of 2019, and we were doing irrespective of whether or not COVID came knocking as it did, was taking around about $7 million of cost out of the business, and that's cost that won't be returning. Once we had that, we had a better balance sheet, we had a more normalised cost structure, a more logical business structure. We were then able to execute in 2021 on growing the business, but growing it in the right way. So adding 2 new verticals being family adventure which is the acquisition of Treetop Adventure, and then also that premium adventure market, which is the acquisition of Wild Bush Luxury. So that, three-part strategy, I guess, was fulfilled by the end of 2021. And now our strategy as we move towards, getting the business back into that earnings potential is really around about getting the business to a scale where it can meet those earnings targets is the first pillar. The second pillar is becoming an employer of choice. So we want the best people in Experience Co, because we think that's really importantly. And the third premise for us is, the best experiences in iconic locations.
Great, thank you. And just you touched on the sort of inorganic growth opportunity in terms of future potential. How do you think about growing existing assets organically versus the acquisition of new assets?
Yeah, so I think it's a really interesting question, right? Because we look at each of the 5 operating parts of the business in very distinct ways. So if I take tandem skydiving and performance aviation, those are businesses that they're kind of really now set. So we don't see the need to organically grow or inorganically grow those 2 parts of our business. On the Great Barrier Reef, we look at it more through the lens of what are some smaller bolt-on acquisitions that would complement the existing businesses up there. So that would be, businesses that, we could add into the business quite easily and just plug them straight in, as opposed to any sort of material sizable businesses in North Queensland, because again, we have a fairly good exposure to that region and we're the second largest operator already on the Great Barrier Reef. So where the organic and inorganic opportunity for that matter really comes into play is in Treetop's Adventure and Wild Bush Luxury. So in Treetop's Adventure, it's primarily been organic. So we opened the St Ives location, jungle surfing in Cape Tribulation, and then most recently Taronga Park. We added those 3 parks to the portfolio. We have another 2 that we'll add, one in Southeast Queensland, one in the ACT, during the course of the first quarter of next year. And then in Wild Bush Luxury, we've already executed, an approximately, a $2 million build up in Bamaroo Plains, where we've expanded the capacity by about 30%. And we think that alone will increase the earnings potential of that business by around 30% across the segment, as well as looking at other opportunities. And the 2 opportunities that we talk about in the presentation is we are the preferred bidder for the Gardens of Stone and Lost City experiences, which was released by the New South Wales government. And we're just working through leasing arrangements for those, which will be a multi-day walk. And we're also in discussions with them about a potential adventure experience involving zip lines as well.
Okay, great. And maybe just to follow on, in terms of sort of return on invested capital, how do you think about, return on invested capital? Are there any sort of specific return hurdles when approaching this point of whether to sort of grow organically versus inorganically?
Yeah, so certainly from our perspective, one of the first things that Owen and I did when we joined the company was really, lay that out. And what we found was there really wasn't a focus on, in the previous acquisition strategy, it was really around purchasing EBITDA as opposed to looking at return on invested capital. The metric we use is, it has to be the absolute floor for any acquisition or any investment in organic opportunities is 10%. So we want to see projects that have a higher ROIC than that. And certainly the projects that, particularly things like the Reef Magic Pontoon, its ROIC was, way higher than 10%, had a 2 in front of it. So they're the types of, projects that we really, really are excited about. And that's the hurdle we look at.
Got it. Thank you. That makes sense. Just turning to FX impacts, how much is the domestic tourism, also inbound tourism, benefiting from a lower Aussie versus US and other currencies? And then there are other considerations we need to think about within the business.
Yeah, I mean, I think it's a really interesting question. When I was running Tourism Australia, I used to get this question a lot. The Australian dollar's low, must make it appealing. It does make it appealing. But the other drivers that also goes into the thought process of an international visitor are twofold. Firstly, it's consumer confidence in the home market. So, it's like like many of us on this call, if we're feeling good about our job, if we're feeling good about life in Australia, we're generally more inclined to spend, and that's just a logical sequence. So that's the first one, is consumer confidence. The second part is, how easy and expensive is it to get to the destination? Because your currency only kicks in once you're in market, as opposed to buying your flight. And I think what we're seeing at the moment, and talking to other analysts, is that that Australia is seen as a high cost destination. There's nothing new with that, but airfares are probably higher than they've ever been. So I think that's the thing that we're watching at the moment to see how that plays out. But we haven't seen any, and we don't see any FX impacts within our business. We don't hedge our fuel, for example, against the US dollar. We don't have foreign currency accounts except for New Zealand dollars. So our FX exposure is quite light.
Got it, thank you. And maybe just time for one more question. Can you touch on the sales and marketing strategy? What channels are you focused on? Is it sort of group wide or individually within each of the assets? And how much is focused offshore?
Yeah, so certainly our marketing efforts really have been, for the last 4 years, really have been focused within Australia. So it's really skydive particularly, but also across each of the verticals, with the exception of the aviation services business, has really been focused on social media, Facebook, Instagram, and then more recently we've started now to look at, those channels in which millennials and other consumers go to. So things like TikTok. We're also starting to look more and more at things like Tinder, for example, which, are channels that, particularly for skydiving, are really appealing. I think then the layer underneath that is then, is sort of more about how do you use your customer database. And what we did over the course of COVID was invest in a CRM technology with HubSpot. And now we have a database that's about 400,000 records in size that we're now starting to use to target you sort of proactively, but then retarget you after you've done an experience. So, say, hey, Sam, you enjoyed the Maria Island Walk. How about you leave a review, but how about you book yourself on the Aqaba Walk? So that for us, I think, is going to be the future. Offshore marketing is really done through our trade relationships and ourselves getting into market, as opposed to buying media offshore, because buying media offshore is very expensive. And it's also, you have to really understand the market well to know the channel you're going to. But we are doing more in China with WeChat, Weibo, Little Red Book, those types of platforms, just because it's so unique.
All right, great. That's a pretty good overview, and it's probably all the time we have for questions today. If there are any follow-up questions from the audience, or you'd like to connect with John and the management team, don't hesitate to reach out. And maybe, John, I'll just pass it back to you if you've got any closing comments.
Look, thank you very much, Sam, and to NWR for the opportunity today. Thank you for your time. We're really excited about the road ahead, and really looking forward to taking advantage of this inbound recovery as it starts to roll out over the next 2 to 3 years here in Australia. So thanks once again.
Great. Thanks, John. That concludes today's session with Experience Co. Thanks for joining. Bye-bye.
Thanks, Sam.